Joining us for a look at the day's market moving news is Martin Smith from Anchor Capital. Thank you so much for your time, Martin. Something we haven't seen on the JSE today is a sea of green. And I don't know if it has anything to do with the PCE numbers that we got from the US or not.
Potentially, but I think there's just a little bit of risk appetite that's returned. And I think a lot of it's been fueled by some of the Bitcoin euphoria that you've seen. That's obviously kind of ticked up markets. You've seen just a bit of positivity and a bit of green across the board. The US market's a little bit range bound for the last kind of week or two. And I think some of that's filtered into the JSE, thankfully.
All right. Well, as we're talking about the JSE, let's take a look at some of the company news. Quite a busy day. Of course, we do have results season heating up. You have chosen FirstRand as one of your stock picks before. So let's actually start off with that. It came out with its results today saying that its bottom line increased by 6%, seeming that FirstRand is doing better than what the macro economy would suggest. We did see, of course, investors plowing in that share price up at 2%. Could FirstRand be one of the safest places to park your money in this environment?
Yeah, absolutely. I think it's a very, very safe bet, and it's a good quality company, and one that, should things kind of improve a little bit, I think you'll see a benefit from that. I'm just also trying to remember when I called it a buy on the show.
I think so.
No, I think you're right. But I think overall, I thought it was quite a decent result in aggregate. Some segments that are a bit better than others, but in aggregate, quite a positive number. And I think the one thing that the market was maybe looking for was provision around what's happening in the UK finance side of things.
Yeah.
Nothing happened there, nothing came out there, which again, the market will kind of look to more information in time. But otherwise, I think the best way to put it was just a decent result and share price up a little bit on the back of it, and hopefully one that benefits from a better environment on the JSE in the months that come.
All right. Well, actually, still sticking to financial services, Santam also came out with results, year-end results today. So group insurance revenue up 9%. We did have those headline earnings per share climbing 27%. Is it not a surprise that, an insurance counter is churning out, such numbers in a subdued economic growth?
No, it's very, very good what they're doing there. It's a very well-managed, very well-managed business. So I'm not super surprised that they keep kind of putting the runs on the board. And I mean, some of it was also guided in kind of pre-guidance. I think they were kind of lifted up by the investment side of the business, but of a lower base to go from there. The underwriting side, I think, struggled a little bit. But overall, a very decent set of numbers. They continue to put the runs on the board. I think they are also a little bit sensitive to what's happened in South Africa from a macroeconomic perspective, as a lot of the stocks on the JSE. But other than that, I think we continue to hold the share, also pay a nice divvy, nice special dividend. So I think it's an overall package, still quite a nice place to be, and one that we continue to hold.
All right, let's go into Spur. That company also had interim results out today. We did have double-digit growth in revenue, that filtering through to the bottom line, where we had diluted headline earnings per share climbing 14.8%. We did see that share price surging 6%. How did you chew up those numbers?
See what you did there. No, it was a very good result. I mean, I sound like a broken record saying we're obviously in a very difficult macroeconomic environment in South Africa, and the consumer's under pressure. So they've got all of those things that they're obviously competing with, but they've done very well in that environment. How they grow from here, it's going to be interesting to see. That I know they're looking to add, I think, 41 new stores in South Africa and 12 internationally. So hopefully they get that volume growth and they continue to be successful in the new stores they bring on. And that's where you'll kind of see an uptick in profitability for them. But again, decent set of numbers in a very, very difficult environment. So let's see if they can continue to do that, and if their new stores and the rollout of that is successful.
More consumer-facing stocks. Truworths also out with results today. Merchandise sales up 8.5%. Quite surprisingly, the margins were stable, slightly up. We did have, headline earnings per share up just over 3%. We did see the share price sliding over 2%. Were those numbers maybe too tepid?
Have I mentioned that the SA consumer is under pressure?
Yeah.
No, I think again, same story, facing the same pressures. Look, the UK-based office business did very well, and I think that actually also picked up the results in aggregate a little bit. But again, until we see, for me, a company like Truers in the retail space, you've got to be quite selective. And I think until you see a real turn in the SA consumer and the kind of forces that are driving it at the moment, I think I'm happy to kind of stay clear for now. But again, the UK side of the business is at least providing quite a nice uptick for them.
Yeah, still sticking with the consumer, Pepco, not results, but they did come out with an announcement saying that they're selling the building company. Of course, we know that they tried to sell that, I think in 2021 to Cash Build, and the competition authorities said nah. I'm wondering also why, because I was looking at that share price, not much reaction, and I'm wondering if this is maybe just not material enough.
I think you're 100% right. It's not material enough. So positive news, they'll sell it down. They'll use it to pay off debt, or the proceeds to pay off some debt, kind of get their strategic focus a little bit more kind of in line. So positive on the margin. But again, 1.2 billion in their lives is, I think, less than 2%, 2 to 3% of their market cap. So not super material from that perspective, but in isolation, nice and positive. Pepco is a business that we like. I think kind of in the places that they operate, I think it's a very good business and one that we hold. But again, this positive, but not super material from a size perspective.
Yeah, interesting that perspective, because 1.2 billion is quite material to me, Martin. Let's go into your stock pick for today. What are you picking?
Stock pick is Visa at the moment. I think trading at a 25 times multiple, growing at 15 to 20% per annum going forward. The metrics are quite nice. You've got to obviously be quite selective about your offshore picks at the moment. But I think Visa is quite a nice, safe play, and one that I think would be a nice compounder over time.
All right. Well, thank you so much for your time and for your analysis today on what has been driving investors' money. That was Martin Smith from Anchor Capital.